He said, well, you need to think about that for a day and then come back. I came back the next day and I said, I'm not willing to do that.
Oh my
Within that
gosh.
short period of time, I left their company, started a new company, sold it, and accumulated more net worth than the gentleman who had fired me in a period of 2 years, and he was twice my age. We bought it for $3.5 million, put about $6.5 million in improvements, and we sold property for $45 million.
Oh my gosh. Mr. Hagenbuckle, welcome to the Cap Table. It's a pleasure to have you on the very first episode.
Thank you.
Very fortunate to have a great relationship with you. Met you when I was 7 years old back in elementary school. And since then, we've been on a lot of fun journeys together. So I want to begin with the beginning. So in 1995, you founded TechWare Consulting. You
Correct.
were around 29 years old at the time. And in 18 months, you grew it to 150 employees. And a few months later, you sold it to a publicly traded company, Cyber Inc.
Right.
After that, you went on to found another string of companies, ORUS Information Services, Collegiate Images, and also Landmark Bank, Fort Lauderdale, which was also acquired by a public company, Centennial Bank, I believe. And then after that wild ride, you were not finished. You started TerraCap Management in the depths of the financial crisis, which is a leading real estate private equity management firm that has around $2 billion in assets today. And then even after that, in 2019, you started Live Fest, which is now the leading music festival in Southwest Florida. It's had top stars such as the Goo Goo Dolls, Darius Rucker, and it's really a household name in the area. So walk me through the beginning and the early days of Steve Hagenbuckle before all those moments.
Well, I think it all started when I was about your age. And what I found myself doing was gravitating with curiosity towards people that were successful, trying to understand what made them different. And the more time I spent around them, there were certain things that surfaced. And none of them were like crazy, talents or skills. It was more around integrity, productivity, and results, which were actually the first, taglines that I used for my first startup, TechWare, was productivity. It's integrity, productivity, and results. And that was the foundation of everything that I've done since. And a lot of what I've done has, in my opinion, had a reverse engineering flavor to it, where I had a daydream of where I wanted to see myself or my career go, and then I reverse engineered the opportunity backwards. So had a vision of the final outcome or the final goal, and then figured out what do I need to do to get to that final goal. And so I would engineer my career path towards that, or any initiative towards that.
So you were born in Florida, but I believe you spent your early years in Colombia. Tell me about how long were you in Colombia for, and what do you remember from that time?
Yeah, so my mother was pregnant with me, and she lived in Bogota, Colombia. My father was with her in South America, working for the Rockefeller family for a company called IBEC. And what he was doing development of brand new grocery stores and retail centers in Latin America, so in Venezuela and Colombia and in Chile. So when my mother was pregnant with me, my dad was actually in Chile, and she was getting ready to deliver, and he was deep in a project and couldn't be present at my birth.
Oh, wow.
So my mother flew to Florida, and the reason I was born in Florida was because my mother needed support, and her mother passed at a young age, and she had my sister already, who was 2 years old. So she stayed at my father's parents' house, my grandparents, in DeBary, Florida, and I was born in Sanford Hospital in Sanford, Florida. And then when I was 4 weeks old, we went back to Colombia, and I lived in Bogota, Colombia until I was 3 years old, and then we moved to the United States at that time.
So you probably don't remember too much from Colombia. You were probably around until 3 years old.
Yeah, no, I
okay.
don't. I really don't.
So you were saying early on in your career, you were always fascinated by people who had success. You want to understand what made them tick and reverse engineer things. At what age did that start? I read in Naples Illustrated that you set a goal of becoming a millionaire by the age of 30.
Mm-hmm.
When did you set that goal and why?
I set that goal when I was in my late teens, and it was, again, just, part of it was wanting to live the American dream and believe in the American dream. And, in order to accomplish certain things, certainly success and being able to accumulate some wealth helps you with that. It also helps you create new opportunities and then create charitable opportunities where you can give back to the community and to people. So that was really what it was about, because I wanted to be in a position, not naively, not knowing really what that meant at that
Yeah.
time. But I just felt that that was like a goal that you see, and whether you see it through movies or other places, you say, "Wow, that'd be great to be a self-made millionaire." And so I set the goal at that age, at like 16 to 18 years old. And a lot of my friends would say, "What do you want to do when career-wise, or when you grow up? Where do you want to go?" And I said, "I want to be a millionaire." But I didn't have like a specific, plan behind it at that time. And that's, like I said earlier, when I started trying to spend time with people who were successful and understand what made them, so successful. And it wasn't, again, something special. It was hard work, dedication, focus, and integrity is what really they all had in common, the ones that I had spent time with. So it happened, the goal was at age 30, and it happened at age 31. So I was off a little bit, but, it was all, through hard work. I put myself through college. I had 2 jobs, sometimes 3 jobs while I was going to college at University of Florida, and my degree was in computer science and engineering. So that's how I got that start.
So you touched there on your jobs that you worked at University of Florida, and I remember you told me personally you did some stuff at various venues, nightclubs, and particularly you had a very interesting insight into the world of being a rock star, because at the time at the University of Florida in Gainesville, a lot of top musicians at the time, like Tom Petty, I believe George Thorogood, I believe was there as well, a variety of musicians. I'm curious, all these experiences with these celebrities, these successful individuals, did that shape your perspective in any way and make you realize if they can do it, I can do it too? They're no different?
Well, their career paths are very different. I mean, their careers are based on more fame and the arts. So getting embraced by either an organization or an entertainment management company, or somebody that believes in them and helps project them through their career and sponsors them, whether it's with a tour
Yeah.
or sponsors a TV show or funds a TV show. I worked with also Eddie Murphy, Bill Cosby, and guys like that. And they all had, different stories, but at the end of the day, somebody recognized their talent, whether it was a company or an individual or a talent agency, and then put money behind them to get them to where they were. And that's how it starts, whether it's a record company or an agency or somebody signing them, to manage them and promote them. But the one thing I really learned about musicians and artists and comedians and so forth is they all have a very elevated skill set when it comes to the arts and talent. And they're on a different level. They really are in those areas. But with that comes some dark things that were really valuable lessons for me, because it helped me see that even with success, some of the most successful people that you would think would be very happy are still looking for something else and were challenged in other ways. And it led a lot of them to substance abuse and things of that nature. So I saw a lot of that at a very young age. And, quite frankly, it helped me decide that that was not necessarily a career path for me, even though I had already performed in and out of bands since I was like 13 years old.
Oh, wow.
And we still do a little bit of that, as you know, but not to the degree that those individuals did. And I never made a real attempt to make it a career path, largely because I saw the lifestyle and the challenges that came with that lifestyle.
I see. Yeah, that makes sense. I mean, a lot of musicians, they struggle with drugs, addiction, those factors. I want to touch on another point. You were talking about one of the core values at TechWare was integrity, and you've mentioned that a lot throughout this interview.
Mm.
Why is that? Was there a defining moment in your career when you realized integrity is a core value, or maybe you saw someone who didn't act within those guidelines and it messed them up later on?
I think it messes them up eventually always, because there's a lot of things that go on in business and with cyclicality of financial markets, capital markets, lending environments, things that are out of people's control. For example, the pandemic with COVID, interest rates doubling, all these things have happened, for example, just in the last 4 to 5 years. And they've had impacts on various different industries. But going way back, what I learned is when there's bad news, which sometimes there is, you have to be comfortable telling the truth and letting people know what's going on firsthand. And don't sugarcoat it,
Yeah.
explain it, learn from it so that you hopefully won't, be exposed again the way you were. And so anybody that's been in business for a long time has had good times and also had some challenging times. It's very rare, very, very rare that anyone goes through a complete career without real challenges along the way, especially if you've done multiple startups. So one of the things I learned is that you can make small mistakes as an entrepreneur, but you really can't make big mistakes.
Mm.
And the one thing that's most important is your reputation. So even if you go through challenging times, as long as you're transparent and you share that with all the people involved, then they can get their head around it and understand and then work with you to come out of those challenging times.
I want to now touch on, so we went through your early life, your time at University of Florida a little bit. Then outside of college, you went to work as a computer programmer. And then eventually towards your later 20s, you were able to rise pretty quickly to be an officer at a public company before you went on to start TechWare. Tell me about those times and those early points in your career before you started your own thing.
Yeah, so my degree was in computer science, and I'll never forget my first business card said junior programmer trainee, which was not a business card I was proud of handing out to anybody because predominantly because of the junior in there, right? So I got this big box of business cards, and I didn't really hand them out for the reasons I just mentioned. But I worked in a small group of programmers at Baxter Travenol at the time. Now it's Baxter Healthcare. It's one of the largest healthcare providers of equipment and non-human services in the world. At the time, when I graduated in 1985, when I was working there, they had 65,000 employees back then.
Wow.
So they were very large even back then. I'm assuming they're a lot larger now. But I worked in a programming and design capacity. I went from junior programmer trainee to programmer to programmer analyst in a period of like 2.5 years or so. And then I realized for me, I wanted to work beyond where I was, and that was working with a small group of designers and programmers. And we were doing some of the coolest first time ever innovated applications that were being created. And we were doing dosage range checking, concentration checking,
Oh, wow.
IV compatibility for inpatient pharmacies inside of hospitals. So these were decision support tools that were never ever developed before. Again, this is in the late 80s, so the first time they were ever being launched and utilized in hospitals. So we had groups of PharmDs, doctorates of pharmacy, doing the design, and we would program them. So, but after a few years of that, 2.5, 3 years of that, I decided that I wanted more activity, and I just didn't want to be in the office all the time. So I walked over to the sales department, and I talked to the head of sales at the time. His name was Wade Sims, and I asked Wade if I could come work in sales. And he said, "Well, that's an interesting request because you have no experience." And he said, "And we're not really hiring anybody right now, but I'll keep you in mind." So every time, every 2 or 3 months, I'd walk to their side of the building and just say hello. And lo and behold, a position became available. So I applied for it, and they gave me the position. I had no formal sales experience before, but I love interacting with people. So I got the position, and in the first year, I was number one for my product type.
Oh, wow.
They promoted me, moved me to Dallas from Orlando. And then I worked in our Dallas office, and I was number one for a larger product type there. And then another company came along and courted me away, and that company was called IDX. My first year with IDX, I was their number one salesperson,
Wow.
also for my product type. And then a previous manager from Baxter, who I had met in the Dallas office, had since gone to become the president of a company called Continental Healthcare Systems, and that was in Kansas City. So he asked me if I would leave IDX and go work for him. And I said, in what capacity? And he had said, as a sales manager. And I said, well, I just made this other career move here, and I'm doing, well financially. I doubled my income, and literally the other company was in the building next to my building. So it was just walk across the parking lot type of thing. And so I went, said to Mike Crabtree, I said, if I'm going to go work at Continental Healthcare, I need a pathway to be your vice president of sales. And at the time, I think I was 27 or 20, around 27 years
Wow.
old. And he said, okay, here's what you have to accomplish. And he laid it out, X, Y, and Z. So I said, okay, if I come there and I accomplish that, you'll make me your VP of sales. And he said, yes. So I went there. We doubled the size of the company in a period of a year and a half. He made me the VP of sales. And then the company in Boulder, Colorado, which was a public company called Clinicom came and asked Mike Crabtree to leave Continental Healthcare and go run Clinicom in Boulder. And Mike Crabtree asked if I would join him. And I said to him, I said, Mike, I don't want to go because I'm your friend. I want you to go because you think I'm the right person for the job. And he said, Steve, I wouldn't ask you to join me if I didn't think you were the right person for my job, for the job. So, he had developed into a mentor for me and a role model, professional role model. And he is the epitome of professionalism as far as integrity, productivity, and results. Just a super honest, hardworking guy, very likable individual, very professional. So when I went over to Clinicom, they made me an officer right away, and I was in charge of the ambulatory division, which meant outpatient services for healthcare software applications. So I went there, and a year and a half into my stint there, they had asked me to do some things on the sales side that I did not think were very ethical. And that included misleading, for lack of better terms, prospective hospitals in acquiring our applications, thinking that they were, completely finished and ready to be installed, and they weren't. They needed more work. But because this was a public company, they were trying to make their quarterly returns, and so they wanted us to go and sell the applications, knowing that it wouldn't be installed for a much later time frame than what the hospital anticipated.
Wow.
But you have to remember, a hospital is buying it in a competitive scenario, picking your product over another, thinking that they can install it immediately and that they can start utilizing it right away. And that wasn't the case. So I had a very hard discussion with the CEO, and Mike Crabtree, who was the president, was in the office at the time, but this was the CEO driving this conversation. And I said, I'm not willing to do that. And he said, well, you need to think about that for a day and then come back. And I came back the next day and I said, I'm not willing to do that. I said, I think it's inappropriate. I think you're going to have problems. You may have lawsuits. You may have other things that are going on. And one of the companies that we bought that they wanted me to do this with had already had lawsuits, like 6 or 7 pending. And this was all part of this merger where they wanted us to keep selling that application and not being, completely open about, the limitations on its installability. So when I went back in, they told me that I would be terminated because of that.
Oh my gosh.
And so it was very difficult because I had this fantastic corner office in Boulder, Colorado, looking at the Flatiron Mountains. And I'll never forget, I sat there in pause. And actually, if you see that eagle out there, there's a framed eagle. That was on the wall in my office. And I kept that with me for, like 30 years now, 25, 30 years, because that very sad time for me made me stick to the integrity and the honesty that I learned from my father and people like Mike Crabtree. And so basically, I was out of a job, and within a few months, that company, Clinicom, was acquired by HBOC McKesson, which is a public company. And then Mike Crabtree was out of a job because they didn't need, duplication in senior management. So he had another company in Dallas called IMN that wanted to hire Mike Crabtree and me together as a package team to come down there and turn that company around and advance their sales. So we went down there, and lo and behold, it was a similar situation. It was a private company, but their software, and this was not uncommon at the time, because this was, again, on cutting edge, the beginning of developing software. So a lot of times businesses would put together these storyboards of what the functionality would look like, and then they would sell the concept and then hurry up and get the funding or do sales and get the funding and then build the software that matched the storyboard of what it would deliver. And so this new company, IMN, similar situation where there was only 40 to 50% of the product was built, and it would take months before it could be completed, yet they wanted us to go out and sell it and say it was installable right away, because you had to say it would be installable to win in a competitive environment.
Yeah.
And once I found that out, after we were already there, I had a sit down with Mike Crabtree, and I said, I'm not willing to do this. I said, I'm not willing to mislead potential buyers or hospitals about this situation. So that being said, I said, I'm going to leave the company. And I said, and just by coincidence, even though this has been going on for a while, I said, there's a private family that has been looking to fund me in either a startup or to go run one of their family businesses. And the family is the Roshman family, and they're out of Fort Lauderdale. And I met Jeff Roshman and his family when I was at University of Florida. And Jeff and I were in college together, became fast friends. And so, again, now we're looking at, like 8-9 years after college graduation. We're still very good friends. And his family said, Steve, we want you to come run one of our businesses. And I said, well, what businesses, did you have in mind? And they were in predominantly fast food, and they were in predominantly that and waste management. And the businesses were in Columbus, Ohio. And I said, honestly, I don't know anything about waste management. I know nothing about fast food, and I don't want to live in Columbus, Ohio, with all due respect. Just, I like the warm weather. I'm a Florida guy now. So they said, okay, we respect that, but we still want to fund something. We will back you and fund you in any business you want to do.
Wow.
And I said, well, that's, quite an honor. I really appreciate that. I said, what I do know is I know software development. My degree is in computer science, software development. I've designed software, sold it. I said, so I'd like to do maybe a technical consulting firm. And that consulting firm would design software to database architecture and network architecture for Fortune 500 companies. They said, we'll fund that. And I said, okay, well, let's do that. You put up the money. I'll be the sweat equity. We'll split it 50-50, and we'll see where it goes. So that's one of the lead-ins you said. TechWare Consulting, in a period of less than 2 years, it was about 22 months, we went from one employee, me, up to 155 employees. We were the fastest at the time organic growing technical consulting firm in Dallas, and maybe in the Southwest, I don't know, maybe in the country. And we were acquired by CBR, trade on the New York Stock Exchange, in less than 2 years. Now, the interesting part of the story, and this is really where things come full circle, and I really encourage people returning favors and remembering where your roots are and where you came from, was when I left IMN and I agreed to go start this company, TechWare. I said to Mike Crabtree, I'm leaving IMN because I don't want to be in an environment. I'll never forget, I was 29 years old or 30 years old. And I said, I'm getting too old for this to be in an environment where we're not 100% truthful about what's going on. And I said, so, because they wanted us to sell that software
Yes,
that
yeah.
didn't exist. So I said, my goal, Mike, is to come back into your office, hire you away from IMN, because he was in the same situation. He was not comfortable there either once we found this out.
Yeah.
So, he fell into the same situation, but had a family, had a lot more bills. I was single at the time, and so he, had a much more complicated world than I did, so I could just leave and start something new. So I said, my goal is to come back here, pay you more than what you're making here, and give you a bigger piece of the equity than what they gave you in TechWare. And we both looked at each other, and I'll never forget, it was one of those moments where you see a senior professional executive looking at you saying, that's pretty optimistic, and the odds of that really working out are probably not high, but good luck to you, kid, type of look.
Yeah.
And we both had tears in our eyes. It was a very emotional meeting. And so I left there. 8 months later, I walked back into his office. And I said, Mike, I'm here to make you an offer. He said, you're kidding me. I said, I'm not kidding. And I said, here's the offer. It's X amount. Salary was slightly greater than what he was making. And I said, and we're going to give you double the equity. They had offered him like 2.5% in the business. We said, we'll give you 5% in the business if you come be the president of TechWare. And he said, let me come down and see what you're doing. So we brought him down, showed him the business. He joined the company.
Wow.
And then 8 months after he joined the company, we sold the company. And so we're invited to the offices of Cyber in Denver, Colorado. And they're in the Denver Tech Center. And we go up to meet Mac Slingerland. He's a CEO at the time. And so Mac brings us into a boardroom like this, and he sits us down, and he said, it's nice to meet you guys. And they picked us up in the airport in a limousine. And on our drive over in the limousine, Mike says to me, what do you think? Like, what's a number you're comfortable with? And I said, I'm not going to get into the specifics of that, but anyhow, I gave him a number, and I said, anything above that number, I think we should take it, but we need to negotiate. So you're a better negotiator, Mike, and more senior at it than I am. So we'll figure that out when it happens. So we walk into the boardroom. Max Slingerland comes in. We do the meet and greet, and he slides an offer letter to us across the table, and it's upside down. He said, I'm going to leave the room for a little while and let you guys read this and think it over, and then I'll come back and we'll talk about it. I said, fine. So he slides the letter over. He leaves the room. Mike and I look at it, and it was 60% higher than the number we were comfortable at
Can't
trading.
show it on your face, though.
No. So we had to like take a deep breath and try to get real serious. And Mr. Slingerland walks back in. He said, what do you guys think? And Mike said, well, it's a solid offer. However, we have another partner, which was Jeff Roshman. Max said, okay, fine, give it some thought. So we said, great. Jumped in the limousine. We're literally jumping out of our chairs on the way to the airport. We get back. We meet with Jeff. Jeff's family is pretty well healed, so it was a good number. But he said, "Do you really want to sell it now?" And we said, I'd like to get a baseline and an exit behind us. So yeah, we do. He said, "Okay, fine." And then I said, "But we need to do one other thing." And Jeff said, "What's that?" And I said, "We need to increase Mike Crabtree's equity stake in the business. Instead of 5%, I want to make it 10%. And he said, "Why do you want to do that?" And I said, "Because he needs that extra money in order to retire at the age that he wanted to retire." Mike was, coming on, I think he was coming right around 50, 52, 55 years old, and he wanted to retire early, and he needed that extra money. And it was an extra $800,000 was the difference for him. And Jeff said, "You're asking me to give this guy $400,000. And he said, "Why would I do that?" And I said, "Because if it wasn't for him, I wouldn't be able to have accomplished what I did, because he gave me the integrity, he gave me the work ethic and the professionalism that we needed to get this done and to grow this business. And I said, it's the least we can do for him. He said, Steve, I'll do this for you because you're a dear friend of mine. He said, I would never do it for anyone else. And he goes, and don't ever tell my wife that I did this. And so we increased Mike's stake, sold the business.
Wow.
And that's the TechWare story. And
Wow.
then we started ORUS Information Services. We started the bank, and we also started a company called Collegiate Images. Collegiate Images we sold to a private company called XOS. The bank we sold to a public company called Centennial Bank, which trades on the Nasdaq as HOMB, Home Bank Shares. And that's a whole nother interesting story. And families taking care of families. When they were starting the bank, Jeff Roshman talked to his father, and they had already successfully built and sold a previous bank, and they sold it to Wachovia. And they had the same management team because Wachovia didn't need the management team anymore because they're a huge company. So Wachovia bought their previous bank, and here's the management team, and the Roshman family said, we're going to start a new bank, and we're only going to let a very limited amount of people be the initial shareholders. And they said, Steve, would you want to participate in that? And I said I would, but as a result of my liquidity events that we've had, I've tied up all my money into real estate, which is illiquid. And so I don't have the liquidity to stroke a check to participate in that investment. So Jeff shared that with his father, Jack, and Jack and I had a pretty good relationship at that time. Jack, I think, was about 72 at the time, but we'd spent time together alone sometimes, me and Jack, looking at investments and things like that. And I have a ton of respect for this family. So Jack calls me up and says, Steve, we want you to be in the initial investment. I understand you don't have any liquidity. How much money do you want to put in? And I told him the number. He said, okay, that's acceptable. He said, I'm going to advance that money for you. I'm going to put it in on your behalf. You write up a loan agreement at an interest rate you're comfortable with. Send me that and I'll sign it, but I'm going to put the money in today for you, and we'll take care of the other stuff whenever we can work it out. And then the second you can pay me back, you pay me back. And he put his hand out and shook my hand. And that's how I got into Landmark Bank with the Roshman family.
Wow.
Yeah. And a year and a half later, I sold some properties, paid them off, kept my side of the deal, and did real well with the bank also.
That's amazing. Wow. There's a lot you unpack there. I mean,
Yeah.
TechWare, all those stories. I mean, I think the biggest takeaway from that is the integrity. I think Mike Crabtree, all these individuals throughout that story. And it shows even through those low points, when you were going to be fired and you didn't really know where exactly it would take you. And then you coming back to get Mike from that. I mean, it's an unbelievable story. And I think it says a lot. Like when I was asking you earlier about integrity, and if you have any specific moments, I think this probably really solidified that for you, for sure.
Yeah, and there's always that, that story, what goes around comes around.
Yeah.
There's an interesting little circle there. And that circle is that the gentleman who fired me from Clinicom, he used to work at Baxter. That's how I'd originally met him back then, but they brought him over there to Clinicom. There was a group of high net worths that were invited to a startup company investor meeting. And I was one of the ones who was invited. And unbeknownst to me, so was this gentleman who had fired me. And he had sold Clinicom like a month and a half after I'd left. They sold that business. But he was in his 60s and I was in my 30s. And we both walked into that meeting, and it was very uncomfortable because there wasn't a lot of words said because of the history there. And I sat in the front row, and he was a few seats over to my right. And the speaker, who was looking to raise capital, was actually Mike Crabtree's brother, who was doing a different startup. Yeah. And it was a healthcare startup. And he is addressing this crowd, and he said, Steve, you're the highest net worth individual in the room. And his other guy's right next to me, right?
Oh my God.
Remember, this is just like 3 years later.
And you didn't know he would be there.
He didn't know I was going to be there. But within that short period of time, I left their company, started a new company, sold it, and accumulated more net worth than the gentleman who had fired me in a period of 2 years, and he was twice my age.
Oh my gosh.
So he says, that
This
was
is
like
unbelievable.
the sweetest revenge was without doing anything inappropriate, was hearing that, and those who knew the story, the Crabtrees, and there were a few others that knew the whole story, are sitting there, and the guy addresses me over the other gentleman and said, I want to hear your insights, Steve, first over anybody because of your recent experiences and your exits.
Wow. That's unbelievable.
Yeah.
I want to zone in a little bit more on TechWare before we move on.
Mhm.
Tell me more, because I know that was during the dot-com era, and you said within 8 months it started with just you, and then you went to hire Mike. How did you grow so quickly in those 8 months, and what was it like? The first few months, just you on your own, like being scrappy, and then growing the team so quickly. Because I know that was a crazy time period, and it seems like we're kind of in a similar area now with AI. There's a lot of opportunity.
Yeah, absolutely. It is. It has some correlations. But you remember, personal computing really didn't start till like the early '80s. It was like '81, '82, right when I was freshman or sophomore in college. That's when Microsoft and some of the others were launching personal computing. There were so many things that needed to be automated that weren't automated.
Mm.
So there was a lot of opportunity, whether it was, like I said, healthcare, finance, all kinds of businesses needed to be automated.
Sounds
And
like
that
now.
and that was in from basically the mid '80s, through up to 2000, like what we're talking about, up to the .com build up. So with regards to the direction there, with the startup, we were basically calling on major companies that wanted to build very specific applications. And then once the application was built and installed, they no longer needed the development team. So these are Fortune 500 companies that wanted software functionality, but didn't want to bring on a whole software development team and keep them long term. It was project based.
Yes.
So they'd say, one of the companies, for example, was Excel Communications. And it was a multi-tier marketing company that was selling long distance and other types of communications when they deregulated a lot of the communications companies. So they would say, and some of our clients were IBM, Enron, WorldCom, big companies,
Wow.
a lot of big Fortune 500s. And what they needed was someone to come in and build something. And then after they built it, they would need also like database architecture built. And then they would also need maybe a call center to help, with a skinny down development group to fix the software if there were problems internally with the software. So we did those three major things, and we competed with big Fortune 500 consulting firms. So we were competing with Ernst & Young, Anderson Consulting at the time, now it's called Accenture. A lot of these different firms were our competition, and we were a small group. What we would do is we would hire on a 1099 basis software developers that were project-based with a specific single intention to build certain functionality over a period of anywhere from a year to 2 years, or merge databases, which we did for Enron. We merged like 26 different databases into an Oracle database. But anyhow, that's what it was all about. And we would hire teams of 5, 10, 15 people per project. And that's what we were doing.
So how did you go about getting your first customer there? Do you remember at all, or how it was with you? And
Quite honestly, I don't remember the first customer, who it was. I remember our biggest customer was Excel Communications. Like I said, we were competing against these big firms. So what I did was try to do something that was unique. I said, so what we're going to do different at TechWare, we're going to do different at TechWare is we're going to give you a 1 month free, where you utilize the resource for a month. If they're good, you keep them and you pay for the month. If there's something you don't like about them during that month, or they don't have the technical standards, or they don't meet your technical standards, or they fall short, and they're not capable of what we hired them for, then we're going to let you not pay for that month. And nobody else was doing that. And so that was the little edge for our little startup, was basically you get a month-long interview while they're on site, programming, interacting with your teams. If they're good, you keep them and you pay us for that month. If they're not good, then we're going to not charge you for that month, and we'll take care of it, pay them, and let them go.
Wow. So it was the creative offer that allowed you to really
Mhm.
break out there. I'm curious, in all of these situations, whether it was TechWare, Landmark, TerraCap, LifeVest, it all comes down to a great team. And I'm sure you yourself are probably aware too. You're probably not the best at every single role within one of these businesses,
No.
but I'm sure you're great at finding the best talent and getting them to rally around your vision and your mission. How do you go about doing that? Finding great people and getting them to really work hard towards the goal that you're trying to achieve?
I think that the biggest thing of all for any leader is to lead by example and be willing to do any job
Mm.
in the company. And when people see that, they recognize that no job is too small or too big for even the leader of the firm. So if he's willing to, get down into the weeds and do anything or travel on behalf of the firm over any particular thing, then if I don't do that too, it'll look bad. But it builds a lot of respect where people see that you're willing to do anything within the organization that they're doing. So as far as hiring the best, you know, you owe that it's interesting when you start a company, a lot of it too, you have growing pains. So sometimes you start with the people that you can afford, and that's not always the highest caliber. But as you grow, you need to see if they can grow with you and if they can evolve professionally. And if they can, fantastic. But if they can't, you either need to find another place for them in the organization or find another more sophisticated individual who can fill that role and help take the company to the next level. And so that's really important. And so, again, one of the biggest things is your reputation. So if you're looking for high caliber talent, you better expect that they're going to do their homework and ask around from people who know you or know of your firm what your reputation is. And like I said, there's no long-standing company like TerraCap's in its 18th year right now, and we've had some really really great years, and we had some challenging years. It's how you deal with that, the good years and the challenging years, that matter, and that whole honesty, integrity, transparency component is really key to your reputation.
I agree. And I like what you said there about leading by example and even at the senior level being able to get into the weeds because having the respect from the people that are working for you is really important. I mean, you even see it with Elon Musk, he's building these crazy companies, but he himself, he's not afraid to sleep on the rocket factory even when he's worth
Yeah.
billions of dollars.
Yeah.
And that's why he's where he is today. And
Yeah.
yeah.
And people see that, and they're like, wow, talk about commitment, talk about dedication. If he's willing to do it, why can't I? And the other thing too is if you're a leader that's not willing to get into the weeds and understand every piece of the business and service that you're providing, how do you really understand as a leader what your staff is going through? How do you understand? You don't know. There's an old saying, you don't know until you walked a mile in a man's shoes, right? You
Yeah.
don't know what he's feeling or what he's going through unless you've walked in his shoes. You have to understand what they're dealing with.
I want to move now on to TerraCap. So in 2008, you started TerraCap in the depths of the financial crisis of 2008. Tell me about that experience. What made you decide to start that? And also, what were the early days like? Because most people who start, these investment funds have a Wall Street pedigree, and you didn't, but you've clearly shown that you don't need that to have a great firm. So, so share a little bit more about that.
Yeah, it was rather humble beginnings, as I mentioned, as a result of my liquidity events that I'd had along the way prior to TerraCap. I was doing private real estate investing. So I was buying either small tracts of land or small apartment complexes or small office buildings. Some of it I was doing through syndications, where I'd attract other investors to partner with me, or I would do it just on my own. And so while this was going on was when we launched Landmark Bank. And so, as I mentioned, as one of the founding shareholders of Landmark, the Roshman family invited me to be on the board, and I was the secretary of the board for 10 years of that bank. And so I would say it was about 2/3 of the way through my tenure as a board member there when the credit crisis was happening. And it was affecting basically all real estate values, similar to what just happened in the last couple of years
Yeah.
with the interest rates doubling in a period of less than 2 years. I mean, it's
Yeah.
just unprecedented. And, going back to prehistoric times, never happened. So anyhow, it was clear that there would be great opportunities at buying at significant discounts, whether you're buying properties from banks or buying loans from banks that were in default, or buying from sellers that were under pressure. Being on the bank board, I saw all these things developing. And that's when I said it was probably a good time to start a fund and accumulate as much capital as possible to go participate and buy in these distressed sales and get in at a good low defensive price point.
I'm not sure if you knew this, but Sam Walton, he actually bought a bank before he started Walmart. And you started a bank as well before doing TerraCap. So tell me about, you kind of mentioned it a little bit there, but were there any other interesting things that you learned about the financial system or changed the way you think about the financial system from being within a bank?
Yeah, that's a great question. So banking is let's just say that it's a lower margin business, usually 2 to 3% profit margin.
Okay.
It's kind of where it maxes out under normal, deposits and activities. And then you have the loan side of it, right? And banks usually will lend, anywhere from as low as 30% of the purchase price to as much as 80, 90% of the purchase price. And so if that borrower goes into default or comes on hard times and can't make their payments for whatever reason, a lot of times they have to give that property back to the bank. But if their equity in the deal or deposit was, let's say, 50%, and the bank loaned them 50% to buy the property, and that borrower gives the property back to the bank essentially has just got something for 50 cents on the dollar. So they don't want to own property, but they have it at a really good discount,
Price.
at a really good price. So they can either sell it, usually make some money off of it, or they can run it and manage it until, and a lot of debt funds do that. Their goal a lot of times is to get to the property, like hope that the borrower defaults. And so if it's a debt fund, a lot of times they'll manage it through the rough times till times get better and sell it at a profit, at a big profit. So, there's banks can be good friend, or it could be your worst friend.
Yeah.
Depending on what's happening in the capital markets and the economy. So back to the question was, when you see this, you learn how to deal with the banks. You learn when to be firm with the banks. The other thing that banks, I try to tell banks, and I say this, with all due respect, is that if you loaned money onto this property, right, you're probably now our largest investor in the property. And if you loan the money, that means that you got an appraisal, you evaluated it, you thought it was a good investment. So if things turn and times get tough, you shouldn't be, meaning the bank, you shouldn't be the first one to run away or say you want out of the deal and take advantage of the situation. You should ride out the tough times with your borrower until things get better and everyone can be made whole. That's not the case in many, many situations. Some of the banks are friendly and will ride it out as long as they can. They also have regulations, and some of them are federal regulations. And so it just depends on the situation. But I learned a lot about banks.
Through that, yeah, I'm sure.
Yeah.
So you started TerraCap in 2008. You start primarily with distressed properties. I'm assuming in the initial days, it was mainly high net worth families, smaller syndications. Tell me about the move then towards institutional capital, which is usually more permanent capital. It stays longer. It's a whole different type of investor. How'd you go about finding the first institutional investor, and how did that change the way that you operate a fund? I'm sure it allowed you to scale, but those aspects.
Yeah, so when we first started out, our first fund was a smaller land-only fund. So it's very different than what we do right now. We do commercial income properties now, but this first fund was all land, and it was 95% high net worth. Our first one or two institutional investors were retirement pension plans out of Massachusetts. One was Holyoke. The other one was Norfolk County, Westfield. There's a few others that came in. But we basically had relationships with individuals that knew people on the boards. And I would go to a lot of these investment trade shows and financial trade shows and found myself as a speaker on the panels. So I would speak alongside of other much more seasoned, much more experienced real estate investors. But my view, being from Florida, is that we were going to only invest in the Sunshine States. Now, this is, again, almost 20 years ago, where nobody else had a thesis like that. And I said the reason is we're going to invest where most of the population growth is happening, where most of the in-migration is happening, and most of the corporate relocations are happening. And for good reason, because people are looking for affordability, lower tax base, and more business-friendly environments. And that's the Sun Belt. So that Sun Belt, basically goes as far west as Arizona, through Texas, through Florida, up through Georgia and the Carolinas. That Sun Smile area is been always our focus, and was one of the things that I would talk about. Well, that resonated with a lot of investors because they're like, wow, someone is going where the demand is, where all the people and businesses are going, and they're going there for the right reasons. And there was long-standing migratory statistics that supported this, but we were the only ones that really made it a thesis and a strategy. And so I've always been data-driven because my background's in computer science, and I follow the data. And so that was what happened. And so I would find myself, debating other senior management professionals from other investment firms over these things. And I guess we got the attention of some of the right investors. And then what happens is you have to have a track record. I mean, this is really the most important thing to understand, is to get into the institutional investing world. A lot of that capital, like 95% of it or more, is managed by major consulting firms. Those consulting firms are conservative. They only want to invest with managers that have a track record. If there's a hiccup in the track record along the way, they want to understand exactly why or what happened, but they need to see a track record. And if and these consulting firms are hired by these pension plans or Taft-Hartley Union funds to help them evaluate different investment strategies, whether it's equities or fixed income, alternatives like private equity business, private equity real estate, infrastructure, all these different things. They will oversee the investments of all this major institutional capital. And then if you have a track record, then they will invite you to participate and present to some of their investors. And then it's always very competitive. There's usually anywhere from 2 to 5 investment managers per strategy competing for a specific mandate or allocation that they're going to do. But once you get into that, as you mentioned earlier, that's tends to be more sticky money because they're always investing and they always have a goal to meet their requirements for their pensioners. So they have to hit like somewhere between 7.5% and 8.5% return on average across all their investments per year to fulfill their obligations to their pensioners. And so you want to be able to produce in that range or better to be considered.
Probably even a little bit better, because it's hard to get that in bonds and even equities now.
Yeah,
Alternatives are on the rise.
Yeah, and so they have a asset allocation mix, the consultants. And they weight them. So you mentioned bonds. They'll say bonds and fixed income, very conservative, very low risk, but lower returns in return for the lack of risk. And then you have other investments that are higher risk, and the higher risk tends to be because debt is utilized to achieve those returns. So, for example, we do some closed-end private equity real estate funds, and those use, and they're called value add strategy, where we're buying, improving, or repositioning properties, and that requires the utilization of debt. So you can get a higher return. You can get 15 to 20% net IRRs at the property level, and sometimes even at the fund level, which is double what they're looking for, but it comes with a higher risk profile. And the higher risk profile is if something turns on you, especially in the debt environment, with interest rates or otherwise, now you're exposed, and you may have some down years and some exposure there. But every investment strategy has good years and bad years. And these investors and the consultants have very long range views. So they're not thinking about just their returns over 3 to 5 years. They're saying pick the best managers and stay with them for 10, 20, 30, 40 years. And in time, they're going to have ups and downs, but if they're a good manager, and like I said, if they have integrity, they will, prevail on average over this long period of time. And you just have to understand, the cyclicality of investments.
So given that, I'd assume that most of these institutions are better from your standpoint as a fund, much easier to deal with than maybe like an individual who's more short-term oriented. I'd assume, more emotional likely.
Much more emotional, and rightly so, because it is, their nest egg or their family's net worth, and it's important to them, and they have more finality. They look at things differently. So once they get to, let's say, the age of 60, and if you have a fund that's an 8 or 10 year fund, you're taking them to 70 years old. Even though you're selling properties along the way and doing distributions, they have that type of longer term exposure. So they put a lot of faith and eggs in the basket, if you will, and hits home, shall I say, more than it does for institutional investors on a much shorter time frame.
One thing I want to touch on is communication skills. Something I noticed, speaking with you is, and even just being around you, is you're a great communicator, a great storyteller. And I find among a lot of very successful people, or people who find success in life, really great at communication. I always see that. So I'm curious, were you always like that? Or was there maybe a moment where you saw, hey, I see this pattern, let me develop that skill? Because I'm sure in these situations, when you're up between all these different funds trying to compete for these pension funds and trying to communicate that you're the best choice, that takes skill, and that skill can take you far. So did that come naturally, or do you develop it? And I'm sure it's valuable.
Yeah, I say it came naturally, and I've always been this way. And I think a lot of it is I'm just comfortable speaking the truth and being transparent. The other thing that I've learned is a lot of the people on the pension boards are not long-term, sophisticated, investment professionals. That's not their career path, or that's not where they came from. A lot of them were elected to be on this board, and they represent the the trustees that are on the board represent the employees or the retirees of the organization. So they may come from a trade, like carpentry, plumbing, electricians, masons, or they may be policemen, firemen. So they don't have these long-standing, investment backgrounds. So the key is, in my opinion, is to talk to them at a level that makes them comfortable, and that they can understand a simplified version of what you're doing and the investment strategy. So really, for lack of better terms, breaking it down into layman's terms. So, you're not speaking above them. You're not using like these global economic terms, that are, even I sometimes are like, really, what does that have to do with this right here, right now, this strategy, and this particular focus or this acquisition? You want to make it easy to understand. You always want them to feel comfortable. And if they don't understand it, take the time to break it down for them, so that they can understand it. And but to your point, and I tell a lot of young people this, is that one of the most valuable skills to get to senior management is being able to sell a concept, a product, a work ethic, or a strategy, because you're always selling something if you're going to be leading an organization or building a business. you're selling one of those things. You're either selling, a strategy to your team
Yeah.
members, a product to your first clients, or you're selling just a way of life, if you will, about how to do things the right way.
Yeah. That's very
So
true.
you're always selling. Even though you may not realize it, you should, recognize that's what you're doing.
Throughout your years at TerraCap, could you maybe walk through some good moments and bad moments and how you've handled those moments, what you learned throughout those experiences? Because I know investing can be challenging, especially real estate, particularly as you were saying, the past 6 years have been tough with COVID. It's been very interesting in terms of the supply, a lot of construction, interest rates, all sorts of things. What's your outlook and what have been your experiences through all those rides?
Yeah, so it's been, like I said, there's a lot of cyclicality in what goes on, and some of the great stories are. I mean, we've bought properties, for example. I'll never forget it. We were selling to Harvard Management, the endowment
Oh, wow.
to Harvard, and it's in Boston. It's in the Federal Reserve Building, 14th floor. We're in the
Wow.
boardroom, and at the same time was a scheduled auction, and we were trying to buy a building in Tallahassee, Florida, that was called a Blairstone building. But anyhow, here we are in the middle of a presentation to Harvard Management, and we're in the middle of an auction bidding. And we had to literally tell, the gentleman from Harvard Management that we need to take a break because we're in the heat of bidding on a live auction for a property. The property was about 260,000 square foot office building, Class B, B plus office building with structured parking on a golf course.
Mm.
And it was in good condition, but it was completely vacant. And so we were able to buy this whole building for $3.5 million.
You said how much square feet?
260,000 square
my
foot
gosh.
building. Very similar looking to this
That's unbelievable.
building that we're in right now. Yeah, it's averaged about 12 and a half, something like $12.50 a square foot, which is what the glass would cost on the building. Right? Yeah. So anyhow, we were successful and we got that property. We ended up leasing it up 100% to the state of Florida to DBPR, Department of Business and Professional Regulation, which is an income-oriented department that's basically licensing for all businesses. So whenever you have a licensed business in Florida, you have to pay them and
Yes.
re-register every year. So that's DBPR. And anyhow, we leased the building to them, and we bought it for $3.5 million, put about $6.5 million in improvements, maybe $7 million improvements, and we sold property for $45 million.
Oh my gosh.
So that would be a good story. We've had quite a few stories like that at TerraCap. I mean, we had an apartment complex not far from here just a few years ago in Bonita Springs called Versal. We bought it for $70 million. We put in $20 million in equity, investor equity, and we sold it for almost $93 million, $92.75 million in less than 2 years.
Wow.
So in less than 2 years, we took that $20 million in equity, investor equity, and made it basically
More than double, right?
almost 40 million.
Yeah.
Because there's deal costs and other expenses involved. But that produced a annual IRR of 50.8% per year to the investors. So that would be another good story. Conversely, we've had situations where there were office buildings, to your point about COVID. When COVID hit, it had a significant impact on office because a lot of people started working from home to avoid interacting with people.
Yeah.
And there were businesses that were friendly to that concept and started realizing that a percentage of their workforce could work from home, and they didn't need the same office footprint that they had before. And so because they didn't need the same office footprint, they would downsize their space when it was time to renew their lease. So that would create more vacancy and less income stream coming into the office in general. So usage was down in office in a significant way. And then while this was happening, the interest rates started running up. And in a period of 17 months, interest rates doubled. As I mentioned earlier, it was unprecedented. It went from You could borrow, we were borrowing stuff at like 2.85, 3% was what we were borrowing at, back in 2020, 2021, 2022, 2023. And now if you want to borrow that same money for that same property, it would be 5.75% to 6.5%, basically double,
Yeah.
depleting or eliminating the positive cash flow that property was generating. So all of a sudden you had a property that was generating, let's say 30% of the income was positive cash flow, right? And then you double the interest rates, and that 30% of positive cash flow is now utilized 100% to service the additional interest rates. So now that property is not producing cash flow anymore at all. It's break even, if that. And then if there's vacancy, because sometimes there's oversupply in markets that have a lot of high growth, like Austin and some other cities,
Yeah.
Atlanta, a lot of people were moving to these markets. So the developers were building a lot of apartments and office and other things in these markets. So they were oversupplying them. So there was too much product to compete, which made it even more challenging. So in the other extreme, let's say it's a floating loan after 3 years, and floating meaning you started at 2.8 to 3%, and in 3 years now, if you want to renew it, it's at 6.5%, and there's no positive cash flow. So the bank will say, well, there's no positive cash flow, so you need to right size the loan, and you need to pay down that loan. Let's say they say, you have to pay down that loan by another 10 or 15% of the total purchase price or the loan amount. So that's like X amount of millions of dollars. And if you don't have the liquidity to do that, then you have that hard discussion with the bank. And that is, we either need to give you the property back or we need to sell it right now in the market. And hopefully we'll be able to make the bank whole and you'll get paid back your loan. But it's likely we'll lose a lot of or most of the equity in the deal that was invested by the investors. And so that's the other side, the other extreme of what can happen. So those are a good story, a couple of good stories. And right now it's not uncommon for the situation that I just shared with you. It's very common. So anyone that had floating debt that they originated in 2021, 2022, 2023, when everything was going great, gangbusters, a lot of those loans are being lost and a lot of those properties are being given back to the banks, which means they're now being sold at significant discounts. And that's what our current fund, Fund 6, is participating in. Now we're buying at significant discounts, even though in some cases we had to sell at significant discounts from a previous fund. So we're like, on one side feeling the pain and the other side feeling the potential upside, like we did in Fund 2 coming out of the credit crisis. And that fund was fantastic. It was a home run fund, Fund 2. And so we see a lot of similarities and correlations in Fund 6. We're buying properties right now at well below what it costs to build them. And I'm talking about brand new properties, 1-2 years old apartment complexes. We're buying at 20-30% less than what it costs to build them. In some cases, the previous owners have lost 100% of their equity, and we're buying them for 40 or 50% less than what they paid for them.
Yeah, I mean, I think there's definitely a lot of, like we were talking about earlier, the cyclical nature, it's something to be aware of. And when there's ups, there's always the downs, but through those periods, there's always opportunities. Even, I'm sure during 2008, not only just in real estate, but a lot of people were just distressed debt investors buying companies like 20 cents on the dollar, selling, there's always opportunities even in the hard periods.
Yeah.
I want to now shift from TerraCap to also Live Fest, and also you're very passionate about music. You have your own band that you play in live, and Good Intentions. One thing I want to ask you about is how are you able to balance the professional world and your passions and hobbies in a good way? Because that's something I've witnessed being around you, is you're very, very good at balancing that. A lot of people are too much focused on their work. A lot of people can get way too far into their hobbies. When you're able to balance that, there's a magic to it. How do you go about doing that?
I think the key is you try to be as efficient as you can with your time, because at the end of the day, there's only so many hours in the day. And one of my other phrases that I've been saying to myself for a long time, and that is that life is not a dress rehearsal. So you only have one shot at life, and you can't, you don't, in some cases, you don't get a lot of redos, opportunities. So you need to take advantage of every hour and every thing. And you also have to balance it too, with family. I mean, I have a family, and I think that, we've got a good balance there too. We travel, we spend time together. We had to, go to all the sporting events, and it's very rare I've ever missed a sporting event from my daughters. But it's being efficient. Time management is really important, and then not wasting time on stuff that doesn't matter, right? And that sounds a little like harsh, but you recognize things that are productive for you and get you to that goal and help you with like the reverse engineering that I mentioned earlier. To reverse engineer to your goals and not get caught up like in the noise or the stuff that's insignificant in life.
I mean, I would argue the noise is getting louder and louder by the day.
For
With
sure.
technology, social media,
Political rhetoric.
Yeah.
There's it's just gotten all so extreme that it's easy to get caught up in that. And I think you need, even myself, I mean, anybody that is honest with themselves can sit there in front of a phone and go, wow, I just wanted to look up this one particular item or watch this one video, and here I am 30 minutes later or an hour later, and I'm watching, these mindless little, snippets and videos. What am I doing? And that's when you need to say, I'm not doing anything. This is a waste of time. Put it down and do something, creative. The other thing too that's really key, Toby, and that is the physicality that it takes. Because, when you get older, you have to have yourself in a certain physical condition to be able to do all these things and balance that type of a schedule. And if you're not in good physical condition, you won't be able to. You won't have the energy, so you need to have the energy. And the best way to get that energy is have a healthy lifestyle, exercise, be careful what you eat, what you do, don't have bad habits, stay away from those vices that we mentioned earlier. All those things are counterproductive. And the quicker you get to a maturity level where you understand that and you're in a position where you know yourself good enough to say, these are my boundaries, these are my guardrails. This is where I can go off the rail, and this is where, I'm going to stay on the rail, stay inside the rails. And so you can have fun, you can do all those things, but understand your boundaries and your guardrails. And then also recognize that you have to have the energy to do all this stuff.
Yeah.
And that only comes from a healthy lifestyle.
Yeah, I agree. Fortunately, it seems like I'd argue that there are some narratives that are pushing people slowly towards a healthier lifestyle. It seems like people are starting to be more conscious, at least in the past few years. But I agree. I mean, especially you look at someone like Warren Buffett, for example. I think there's a statistic, something like I think 90% of his returns came in the last 10 years of his life. And it's compounding is the eighth wonder of the world. So not just in terms of career and investing, but even just in yourself, like whether it's in your physicality, your knowledge, your wisdom, compounding is the eighth wonder of the world. So if you can just add an extra 10 years to your life, there's some magic to that.
Yeah, because you know what happens is the older you get, the more you have these lessons learned, and you know what the landmines are, what the pitfalls are, and you know what to avoid, whether it's bad company that you need to stay away from, or whether it's bad business dealings or bad actors in business. You get a sense for all of that. And so, like I mentioned earlier, it's okay to make small mistakes, but as an entrepreneur, it's not okay to make a big mistake. As an entrepreneur, you make a big mistake and you can't fix it or learn from it and prove that you learn from it and show that, to the people that you work with, it could be the end of the program. And depending on also where you are in your life cycle, the end of the program, if you haven't positioned yourself well, right, and it ends too soon, could be
not a good life.
Not good.
Yeah. You were mentioning there bad actors, bad people. Mm-hmm. This is one thing that I wanted to ask you about as well. I'm sure, especially when you come across success in life, people come into your life with malicious intent. And I'm sure you've had experiences like that throughout your life. Do you have any advice for me or anyone who's listening to this on how to handle those situations from your experiences?
Yeah. So the more successful you are, and the more that people know about it, the more those bad actors come out of the woodwork, and they want to magically either ride your coattails, come up with a great concept or idea they want you to invest in. All these different things you'll see, and that is not uncommon. So another thing that I have noticed is the more successful you are and the more wealth you create, in a lot of cases, the harder it is to keep it because of all of these temptations. And some of them are self-driven. Like you go, oh, well, I had a good 2 years. Maybe I'll, sell our house and buy a house that's, 5 times the cost of the previous house.
Yeah.
That's a great assumption. That basically means your lifestyle is never going to change after those 2 years. And you're always going to be at the higher income level. But I mentioned earlier, there's ups and downs, and you have to think about that. So it's not advisable to triple your cost of living or quadruple your cost of living because you have 1 or 2 years. It's also not advisable to surround yourself with a brand new circle of friends that you don't have history with because you're successful and they all want to ride your coattails or participate in some capacity, whether they're seeking, X, Y, or Z. There's always a reason, right? Like, why is this person
Of course.
talking to me all of a sudden? So I would say the advice would be the more successful you are, the more thoughtful you need to be in your relationships, the more careful and more guarded you need to be. And, they say the cream always rises to the top, right? So the good people, in time, you'll see who they are.
Yeah. I think, just like when you're talking about the Rochman family, I think that's probably the quintessential example in your life. They were there with you in the hard times and the good times and all those moments. And I think also, the testament to the fact that you're friends with their son throughout college, even when, times were much different than they are now.
He was at Live
Yeah.
Fest last year.
Yeah.
He said to me at Live Fest, we're in our ultra VIP suite on the second floor. He looks over at me, and you remember we've been friends since we were
Yeah.
like 18 years
Oh
old,
my gosh.
and we've done at least 4 or 5 businesses together, and we've owned like 3 or 4 properties internationally together on the real estate side. He looks over at me and he says, at Live Fest, he's looking out at the crowd, and it's a sold out crowd, and he says,
It's crazy.
this might be the coolest or best thing you've ever done. That's what he said to me. I'm like, really? And he's like, yeah.
It is pretty sweet going there. It's amazing. I want to close off with a final question, which I feel like could bring an interesting answer. What is the most challenging thing? You've spoke through a lot of experiences, but I'm curious if there's anything else that you haven't mentioned. The most challenging experience that you've went through in your life, and how did you overcome it?
It's literally been the last few years, and it's been dealing with a real estate portfolio that has a lot of complexity around it because of the debt and the doubling of the interest rates. So we've restructured our complete acquisitions department as a result of that, where we're underwriting things much, much more conservatively. Our debt structure is much, much more conservative. But the biggest challenge is explaining in elaborate detail, which we're very comfortable in doing, to hundreds of investors. I mean, we manage a lot of investments. I think we have a total of like 340 investors.
Wow.
And 128, 130 of them are institutional investors. Explaining to them what's going on in the marketplace, if there is a situation where there's a loss, explaining the details of that, and most importantly, repositioning and restructuring our company so that we've learned from these lessons, we take ownership of them, we don't, blame anyone else for what's going on, we take complete ownership of it, and we are repositioning how we do things and the way we do things and de-risking things compared to some of the practices in the past. And the practices in the past were industry norms that we were doing and following, so we weren't the only ones challenged with this. But I can tell you there are firms that have had to deal with this, private equity real estate firms that are no longer in existence, and some of them have lost significant amounts of money And it's, again, not that you experience it, but what did you learn from it? How did you remain transparent? And how have you repositioned your organization to avoid those situations in the future? And that's really been the biggest challenge of my career, has been really the last few years in dealing with that.
Well, thank you for sharing that. I know it might be a more intimate moment for you, but I appreciate because there's a lot of lessons to learn from there. And I'd say my biggest takeaway from this conversation is the integrity piece. I think it shows up in all aspects of your life from when you were young to where you are now. And I think it'll stick with you forever. And I'm going to carry that on with me in my life. So
Good.
thank you for the talk. This is
You're
episode
welcome.
1 of the Cap Table, Mr. Steve Hagenbuckle. Thanks for coming on. It was great.
Thanks for
Thank
having
you.
me.